The post-COVID revival of the real estate sector has had a flip side, the slump in affordable housing, as economic uncertainty and shrinking paychecks hit hopes and aspirations of many salaried employees and small business owners. In contrast, demand for mid and high-end homes has grown as well-heeled chase bigger homes. Rishabh Mishra brings you the detailed report.
India's real estate sector has been upended by the COVID-led economic changes that most other segments of the economy have witnessed. With the pandemic altering the purchasing power of many, the real estate market has witnessed a significant shift. According to a report by property consultant Anna Rock, the launch of new affordable housing projects came down from 44% to 20% between January 2020 and June this year. At the same time, the mid-end and high-end homes saw a boom.
The biggest trend is that we're seeing that the share of affordable housing is going down in comparison to the mid and luxury. So that's another impact that has happened on affordable housing.
The ANAROC report says the launch of mid-end housing segments saw a boom, growing from 36% to 43% in the first quarter of 2021. A similar rise was seen in the launch of high-end homes, which grew from 15% in the first quarter of 2019 to 36% by the second quarter of this year. This trend has been driven by rising economy in many sectors like IT, fintech and startups.
The high income group, there we've seen that the wealth has grown, and as a result of which a part of that growth in the wealth is going in buying bigger apartment, luxurious apartment.
The trend poses a challenge to the government's incentive schemes for boosting affordable housing. For developers, this means that chasing the higher end of the market would deliver better margins. Bureau Report, Business Today Television.
Taking note of the Pandora Papers, the government today said investigations in the cases will be monitored by a multi-agency group headed by the chairman, CBDT, and officials from the Enforcement Directorate, the RBI, and the Financial Intelligence Unit. The CBDT will also proactively engage with foreign jurisdictions for obtaining information of relevant taxpayers and entities. The matter pertains to the International Consortium of International Journalists, or the ICIJ, reports on a 2.94 terabyte data trove that claims to expose offshore secrets of wealthy people from over 200 countries. The ICIJ claims the investigation is based on a leak of confidential records of 14 offshore service providers that give professional services to wealthy individuals and corporations seeking to incorporate shell companies, trusts, foundations and other entities in low or no tax jurisdictions. The Economic Affairs Secretary Ajay Sheth at a FICCI event said that the credit offtake has moderated in the last 18 months due to the pandemic. Listen in.
In spite of the pandemic, and the gross NPAs have come down from 11.2% to 5.9%, and net NPAs have come down from 7.5 to 2.4%. Even RBI's assessment, even in stress case scenarios, also shows that it will be well within the upper limit which we can afford to move forward. In the past 18 months, because of the lack of private demand, investment demand, the credit offtake has been rather moderate. Now, that's an area where the further work is needed.